Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from 1911 Gold Corp. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Sean Heinrichs, President and CEO of 1911 Gold Corp, which trades on the OTC markets under the symbol AUMBF and on the TSXV under the symbol AUMB. Welcome, Sean.
Thanks, Matt. Appreciate the introduction. Good morning, everyone. Thank you for joining me for the 1911 Gold presentation, and thank you also to the OTC Markets for putting on this event. Really appreciate the opportunity to reach out to new markets, obviously virtually, make an introduction to the story, and kind of expose new potential investors to the 1911 Gold situation and strategic, value that we find in our asset. So first, before I move on from the initial slide here, I just want to highlight the strategic assets you see in front of you. This is really something that sets us apart from many of the other junior mining companies out there right now. We have all the existing infrastructure you need for a quick restart and return to productive operations on a very short time frame. You can see in the center there the existing milling facility, and just off from there you see the head frame down to the main million-ounce resource, which we're going to dive into here a little bit and get further details on. But really, this is something special to this company and special to this to this industry. It's a past producer, and we've now locked up an entire gold belt on top of all that. So you're getting exposure not only to an existing resource and assets on the ground in great shape, but also a very prospective gold belt. With that, I'll move on to the next slide. This is the next slide here is, there we go, cautionary statements. During the course of this presentation, of course, I'm going to be making a number of forward-looking statements, which will be subject to both external and internal factors that may change their ultimate outcome. We've tried to list all of them there. Please read that and just be advised that this is an industry that is subject to a number of forces which change its course. However, I do feel like we have a very stable foundation here. That said, I'll move on to the bulk of the presentation. This first slide here, you see the overview of 1911 Gold. Really highlights the three key components as well as the compelling opportunity here on the far right. Essentially, we start off with the mill infrastructure that I already mentioned on that first slide. What you saw there was a fully permitted 1,300 ton per day gold processing plant, which has historically run well over 2,000 tons a day. All we require to reach those capacities, again, really is a further investment in the crushing capacity. The rest of the circuit is really outfitted for oversized 3,000 tons per day plus production. So lots of room to grow. Something like this would cost well over $300 million in today's market, and you're looking at 10 to 15 years of permitting and back and forth of uncertainty. With us, you get none of that risk. This is a fully permitted operation with the tailings facility and all the surface infrastructure you need to get a working, operating mining camp once again. In addition to that, you have an existing 1 million ounce resource in that shaft mine that I showed you on that first slide. There's 1 million ounces still in the underground there at over 6.4 grams per ton. The measured and indicated component of that is in excess of 7 grams per ton. There's been over 2 million ounces produced on this property. I think 1.8 million in that mine alone. The rest of it has come from a variety of areas across the property, which shows you how prospective this area is. We're looking at that resource right now. We're de-risking it and coming out with a strategy around mining it and growing it over the next 6 to 18 months. So stay tuned for the rest of that. On top of that, you're getting, as I've said, exposure to a very large portfolio of gold prospects here. We're sitting on over 63,000 hectares of consolidated ground, continuous. We've got over 45 years of assessment credits on that ground, which means we've got a very secure land title. We can focus our exploration wherever we wish on the property without any risk of losing any parts of that property. This is a very underexplored gold belt lying right in the heart of Manitoba. Looking at our cap structure, the key takeaways here really is that we did a recap financing back at the end of last year in December. In that raise, we brought in a number of strategic high net worth investors, with the key one being Eric Sprott, taking a 12% position in the company. That was premised on the fact that we'd gotten Gary O'Connor involved, and he saw the focus on the resource and on the restart potential of this property. Not so concerned about time frame for restart. He's okay with 2 to 3 years, but as long as there's a clear path and a clear potential for a producing asset, that gives them the high leverage to the gold price, which we all know is headed up from where we are today. On top of that, we have brought in a number of institutional investors, including a group out of London and a number of other high net worth investors, which are pretty common for a junior company of this size to find in terms of funding itself until it gets up to around that 30, 50, where you start to attract even bigger names into an asset like this. Looking ahead, we've undergone a number of changes in terms of management and board under my leadership. A lot of this is pivoting towards our current strategy, which is around rebuilding the resource and growing the resource, and then stepping back out to the regional belt. So I needed a good mix of both explorationists as well as experienced geologists in mining and in developing and growing resources. So I got that both with Michele Della Libera joining, former New Gold Director of Exploration, largely responsible for the drill out and startup of the Blackwater and New Afton mines, as well as working on the Rainy River mine there. Very experienced, well over 30 years of hands-on experience in building and developing resources. But on top of that, we brought in Gary O'Connor late last year, initially as an advisor, and as his story grew and became more compelling to him, he's now joined the board as an executive chair, and him and I kind of go hand in hand in terms of marketing this story and guiding the direction of the company. We've also brought in Blair Schultz recently. He was formerly part of the board as part of the Klondike spinout, very knowledgeable on the asset, very knowledgeable on capital markets, and a big believer in the strategy and the assets that you're going to see shortly. So where are we? I have to zoom really closely here, but we're essentially about 3 hours north of Winnipeg, centrally located right off the Ontario border, approximately 100 kilometers to the west of the Red Lake camp. We lie right along this Wanapagao fault structure, which basically defines the lower boundary of an ancient plate margin. These are areas you typically go to look for large orogenic style systems, which is why you found such a prolific area over here in Red Lake Belt. And you've also got this very prolific Rice Lake Belt here over to the west, which we've now consolidated all under our name. Essentially, there are a number of past producers on this property, but very little in terms of exploration. So there's significant upside potential for many large discoveries still remaining on this belt. So why is it underexplored? Essentially, it is due to the fragmented land position in the past. As you can see, it's a big network of postage stamp land holdings. A lot of these, I mean, if we put all the different claim holdings on here, it would get very messy. A lot of it was held up by small prospectors or very small public companies, limited budgets, limited property size. You can only explore so far on a claim before you run into the next property or the next person's property. So very limited scope, almost no drilling on many parts of this property, particularly up to the northwest there. But this is good open ground. We've got large kilometer-long structures with evidence of gold bearing on surface throughout, based on the work that we've done under Scott Anderson, our former VP's leadership. So we've built up a number of highly prospective areas. And once we've completed de-risking the core asset in and around that True North mine, you will see us start to step out to the regional belt again and start to develop some of those core assets that have the nearest term potential to be producing mines. Then over the longer term, the 10 to 15-year time frame, we're going to build out a large portfolio of gold producing operations on this property, because there are many areas we need to return to follow up on some of the results that we've achieved already. In terms of our governance and our community relations and our environmental stewardship, this company does stand head and shoulders above many. We lie in a very nice area in terms of being right in the heart of a mining community. The town of Bessette is very supportive of our current activities. We're a large employer in the region, both of local communities, local First Nations communities. We have had historically good partnerships with the Hollow Water First Nation, which has a very strong mining foundation underneath them. And we'll look to have more partnerships with them in the future as we start to turn this around. On top of that, we have one of the lowest cost energy sources coming to site with hydroelectric power from Manitoba Hydro. It's about 5.3 cents kilowatt hour. The only province really that beats the pricing in Manitoba would be Quebec. So it's a very nice low cost operation with potential to scale up that electricity over time, as we have a very large 30 meg line coming to site. So lots of ability to electrify the rest of the site as we move forward to a restart scenario. Moving on to the next slide, we're going to step through the mill, and I'm going to get to the resource, which is a big part of our focus right now. The mill historically has been a two-stage recovery circuit, processing between 1,300 and 2,500 tons a day with the appropriate size crushing circuit. It's a fully operational camp. We do recover gold both through gravity at over 97, 98%. About 40% of our gold is recovered there, and the rest comes through a CIP circuit. Slightly lower recovery, but that enables us to capture the bulk of the gold going through the mill. The area, the metallurgy in the area is known to us. There's a lot of historical information to work off of, and the types of ore you're pulling out across this property is exactly the same as what was coming out of True North. So in terms of ability and risk with respect to future production potential from other areas around the property, it is very minimal. This is a very well-known and tested ground for the company. We do have road access throughout. I should have highlighted that previously. There is a road that comes right through the middle of our property, all the way from the west to the southeast. So good road access throughout. I would also say because we have such low cost energy, we do have a group right now using our excess power to do data processing activities, and that does net us about $450,000 incremental income every year, which is great for us, and we have the ability to probably scale that up in the future. On top of that, we do have an option to lease lithium spodumene concentrate from the Donner property held by Grid Metals in the event that they get that into production. We have a preliminary arrangement with them where we can start to process that, and that would generate between $3 to $5 million to 1911 gold by using excess capacity at our mill. And as I mentioned, we can scale this whole operation up over a longer term if we want to start batching both through for a longer period of time. Looking at the resource, right now we are going through a large refresh on this resource and expect to have a new one out probably towards the end of August or early September timeframe. We are working through getting a number of different areas incorporated into the resource, so we have a very robust working model. But we have already audited that 2018 resource. We spent the first 4 months of 2024 working through that with a consultant who is an experienced Red Lake resource modeler. And we verified the bulk of that resource through the work that he did. So we're very comfortable now with that 1,000,000 ounces there and the grade that's reflected on there, and the fact that we can really kind of start to remodel that ourselves and consolidate that in a nice, clean version of this model will be really setting us far ahead in terms of our future exploration plans. So look to see that update out towards the end of August or early September, as I mentioned. We'll have a lot more information in there. It's going to be a really robust model. And it's going to feed into our long-term exploration strategy in and around that area. The reason I put this slide in mainly just you can see the existing infrastructure underground, good access throughout. Now this is the main shaft mine where the bulk of the historical production has come from. It's approximately 1 kilometer down. You see the scale on the next slide, and then about 1 kilometer across to get to where the resource is. As you can see, it's been slowly stepping away from the A shaft. We still have pretty good access here. You can automate this, you can streamline the production from these areas. So really it's not a significant roadblock. What it does do is slightly constrain capacity. So a big part of our strategy always has been to find alternative sources of ore, not because this isn't economic, but because it'd be ideal to have multiple sources of ore going to the mill, giving you maximum flexibility and giving you optimal grade and finding near surface resources as well gives you the ability to scale up when you want. These mines over here, we call these the ramp mines. This is the Hinge and the Cohiba mines kind of hiding up here, and then right overlaying that's the 007 mine. These are 3 separate mines, all open at depth, all on separate mafic units, these large controlling structures, which you can see kind of more clearly here as they dip down to the northeast. These are all open at depth. Given the nature of an orogenic system, there tends to be significant resources the further down you go. Highlighted better on this slide, you can see we've circled a number of areas where there's significant grades. Some of this is incorporated into the resource, but not all of it. We'll look to infill and upgrade as much of this into the resource as well as upgrade some into the M&I over the next 18 months. We'll start really this fall with expanding that resource. We're going to test a number of areas here. But there's a nice unit out here as well, which remains largely undeveloped and unexplored. There was a lot of near surface drilling done back in the late 2008 to 2010 period. They didn't follow it up because there was other priorities, but you can see this is the makings of another potential mafic unit. So just controlling structure running to the northeast. And wherever these mafic units are, you get intersections of the main, what we call the 16 and 32 type veins. They're just two different styles. Wherever they meet, they tend to blow out and create these large or gold systems which you can mine for decades. And that's what happened with the old timers up here. Lots of very large ore bodies. And you can see we're starting to get into some really interesting material again down here at depth. So we're going to look for ways to optimize this infrastructure, make connections where we can between the mines, build several points of access. If there's significant resource here, we can even look at putting in a second main production shaft right into the heart of this, get access to the lower levels. It's all going to be grade and results dependent. There's a lot of potential here to have even a small restart situation which you scale up over time and make this a very profitable long-term mining operation again. And then stepping out as kind of the longer term strategy, we really want to build out this hub and spoke opportunity on our property. You can see the property outline, all consolidated. There's that road again, running right through the middle of it. So there's nowhere we can't get to on this property. Obviously, some of it's swampier, so we tend to focus on winter access. But in the event that there's a development scenario, we would look to build additional kind of road access to those areas. Not very difficult. These are all within 10 to 15 minutes off of the main road. So not a significant amount of development. We've got two key areas here for near-term exploration and development potential, being the Ogama Rockland property or project area and the Central Manitoba project area. Ogama, past producer, 50,000 ounces, current resource, 340,000 ounces, rounded there at 8 grams per ton near surface. Central Manitoba, large 2.5 kilometer on surface strike length there that you can trace easily. Underexplored to the southeast, very little to no drilling in that area. Past producer on that top northwestern part of 160,000 ounces at just under 14 grams per ton. So nice high grade area. Obviously that mining back then was quite narrow, but we could look to explode that out a bit. That would take a lot of, that could withstand a lot of dilution. That could be a very productive area though. We think there's significant potential to grow that down dip. So those would be the two near term areas. Longer term, plenty of targets across this belt. You can see all the high grade mineralization on surface, and that's with some significant ground cover in certain areas. So good open ground, lots of good IP signatures over certain parts of the property. We do have aeromag and LiDAR as well, so we've got lots of information to work on. Compared to our peers, we see ourselves still as a very undervalued story. A lot of that is just lack of marketing on our side, to be honest. We've had a very focused strategy over the last several years, which was largely a quiet strategy during 23. We've gotten a lot more active in 24. We are looking to expand our horizons in terms of the shareholders that we reach out to. You can see a clear distinction between us and many of the other companies on this list, which are all basically in the process of developing large assets. These are all great companies. You can see one glaring difference is that we have the infrastructure already in place, built, permitted, ready to go. There's really only one other company there that has that. And we don't come with any debt. We don't come with any royalties. So nice, clean balance sheet. And as I said, you're also getting exposure to a really interesting, large prospective gold belt on top of that. Looking at the next slide, really, it's just another valuation metric based on ounces in the ground, not even looking at assets on the surface already in place, the permitted nature of our facility, and the upside potential of the property. We are trading at roughly 20%, 15 to 20% of where we should be relative to that kind of industry-based metric of 80 cents per ounce in the ground. So we're looking to at least bridge that gap in the near term. I think de-risking the resource and republishing it with new eyes, new thinking, and new thoughts in terms of exploration strategy in and around that is really going to highlight this difference even stronger for new investors. And this is a dashboard. I mean, there's multiple aspects to this company that make it a very interesting and compelling play, particularly even for a takeout perspective. That's not our strategy, obviously, but there are some things here that are very interesting. We have a large tax pool under the company. 150 million of that is actual straight loss carry forwards, which can be applied directly against income from any mining operation in Canada. And then there's a large base of resource exploration and development credits in there that can be amortized over time and reduce income over a longer term period. Those don't expire. On top of that, low cost energy, significant database value here. Don't forget, this has been running for a long time, so there's a lot of information to work off of, and a lot of that can be applied across the Rice Lake Belt, but also into the Red Lake Belt. So there's a lot of interesting information to work off of here, which has incredible value in today's market. So what's the strategy? I think I've touched on it a few times, but really we're looking to rebuild. We've rebuilt already, and we're now in the process of having the estimator update the resource. They've taken our model. They're in communication with our people. We're looking at the Ogama Rockland resource to see whether or not we can incorporate that into the resource update as well. If we can do that, we'll look to have that out in there as well. Otherwise, we'll incorporate that in the future. We're looking at areas of open potential in and around that existing resource, and then we're going to start to step out a little bit into the regional as well, but it's going to be very much focused in and around the areas of historical mining activity and the areas that have not been adequately followed up. On top of that, we are engaging a mining advisor, an experienced underground, narrow vein, high grade mining person who's got a lot of understanding of how these systems work and how to mine them optimally. That's something this property also has not had for a long time, is fresh eyes from experienced people in this industry, and we brought somebody in. We're going to start working on that, and it's going to be a big part of our update down the road. Is how are we going to mine this? You know, how profitable could this potentially be, and what is the upside potential of the resource, and then what is the larger upside of that whole regional belt? So that's really the key steps for us over the near term. I'm going to leave it there. I've got some questions going here on the right. If you have any other questions and you don't want to post them here and you want to ask them separately, my information is kind of on this last slide. That email does go to me, so I can't plead the fifth, but my email is also on every single news release. I do tend to answer all of them, as I'm sure some of the retail investors out there will tell you, and I look forward to being interactive as much as possible and addressing any concerns as people tend to look at this opportunity closer and see whether or not this is a right fit for their investment portfolio. All right. With that, I'm just going to skip to the slide a little bit, or skip to the question. So the key milestones here is one of the first questions. What are the key milestones for the next 12 months? That last slide was meant to kind of address that, but obviously it's always a little unclear. We do, as I mentioned, we do expect over the next 6 to 8 weeks to have an updated resource out. We also will have an updated exploration strategy. So where are we planning to drill in the fall? What do we expect to achieve from that drilling? What are we expecting as the outcomes? Those will be the key deliverables over the next 8 weeks. That's going to show really the potential of this mine. It's also going to show that the resource is real. And you're going to start to see some credible people getting involved here and carrying this forward. We've already brought Gary in, we've brought McKelly in, he's brought people in underneath him that are also experienced geologists. We need to close that mining component of it. We're not looking to get into production right away, but we want a clear path and clear timeline for that. So you could expect to see a PEA at some point over the next 6 months. We obviously want to be smart about it and evaluate the best way to get that out there. Whether or not we want to complete more drilling is going to really dictate how that goes. But what you'll see, I guess, in Q1 and Q2 of next year is likely more drilling. This initial drill program has almost a proof of concept, proof of the upside of that resource and proving that we're right about what we're doing. But we are going to look to have a more robust program in the winter time. That may involve a return to regional drilling at the Ogama Rockland and central Manitoba. It's going to be somewhat market dependent. We are trying to be smart about our use of capital as well. We would look to probably have an updated preliminary economic assessment, like I said, over the next 6 to 8 months. that would be a way to display the mining method that we expect to use in working in this underground area, and how we expect that to improve the profitability of the operations. And then over the longer term, you're going to see us return to the underground. There's significant resource potential. The biggest jewelry box right now known to us is that depth in that underground mine. So when you look kind of back at that, one of those slides, if I think I can go back there. Well, anyway, I'm not going to fool around with it too much. There's the, there we go. Okay. There we go. So right here, there's lots of resource potential in these ramp mines, but this is the really interesting area. The grades really improve at depth here, which is why I mentioned potentially a production shaft here. That's a way to get in there and mine it quickly and ramp up production. But I see really kind of a long-term potential in a number of different areas here, so we're just trying to be smart about our use of capital. In terms of one question here is on insider buying. Obviously, I've been a big buyer myself to the extent that my funding and financings are capable of that. I do have some expectation that there will be some additional buying from other insiders here, particularly from Gary and McKelly. McKelly needs a starting position. We had a bit of a run in the stock last week, which may have given them a bit of pause, but I think where we're at right now is likely formed a new base. We're probably going to stick around this 13, 14 and start to build from there, which is a really great, I think, foundation for us. So I'm encouraging them to get in there and start getting a position going. As well, you've historically always seen good insider participation in our financing. So that's often a way for us to get a large position without influencing the stock too much. There's another question on milestones catalysts that will drive a re-rating. Essentially, just to reiterate, republishing the resource should highlight the asset better, highlight the upside potential here, and de-risk it for a number of people. There are people waiting to see that resource and make sure that it's real. So that's going to be the nearest term catalyst for us, and that could come anytime from mid-August on. We are working hard on it. The next step's really going to be that initial drill program. We've got some easy, low-hanging fruit that we intend to drill. Some of it's going to be proof of a concept in terms of where we think it's open and where it needs to be followed up, and some connections that we're starting to see. And then following that, obviously, the next big catalyst is a larger drill program followed by a PEA, which shows the mining strategy that we're going to be utilizing in the underground and showing the potential profitability of this operation. And again, like I said, once we get going down that production path, it's a relatively quick, a quick time frame to get in, because there's all the infrastructure's there. We don't need to develop to get into these resource areas. We will do some development because we need to get better access or better infrastructure in place in the underground, but we're not going to have to mine to the resource. We're already in front of the resource in certain areas, so it's going to be a lot faster than what you see in some other companies. In terms of how much capital we would need, so we've raised approximately, including the $4 million raised last year, I think we've raised about 18 million so far. The large portion of that has been flow through. Really, that one we did in December of last year was the only hard dollar raise. So a lot of that flow through funds has gone towards regional exploration drilling, which is why we have so many great targets for us to follow up in the future once we're able to kind of fund a regional program again. It's not going to be our priority in the near term, of course, but we do have a lot of interesting targets and compelling areas to follow up on that have potentially be additional mines on the property. In terms of myself, I was part of the Klondike spin-out team in 2018. I initially came in as the CFO. I worked closely with Ron Clayton for a while, and I ended up taking over just because I really saw the vision being pivoting towards the mine. It was an area where we had a bit of a disagreement on. I felt like we needed to step back, focus on the assets and the infrastructure, and the assets that we already had, optimize those, and then start to step back out into the regional belt and supplement what we're getting from the underground with what we can get from the regional target areas that we were starting to really see come out. The last question here, probably for timing, can you speak to 1911's AIDC hit rate, total meters drilled, and drilling costs per meter? I can really only answer a fraction of that. Drilling costs per meter, totally dependent on what area we're drilling on. When we were up in Wallace doing helicopter drilling, it was in excess of $350 a meter. When we're down at central Manitoba, you're looking at sub $200 a meter. when we're drilling in and around the mine site, I expect it again to be sub $200 a meter, just because there's really good access, very little disturbance, no line cutting, none of that needed to get into those areas. Total meters drilled regionally, it's in excess of 35,000 meters. In and around the mine, though, I think I had that one slide earlier which highlighted it was well over 400,000 meters drilled in the underground area, so lots of information to work off of. I'm going to leave it there. I can't answer the hit rate. Sorry, feel free to email me and I'll try to get a better answer for you there. And I probably left a few other questions unanswered here. OTC, yes, it's back on my radar to upgrade the listing. I should probably stop there. I closed my chat line here, but I will leave it there. Happy to answer any questions after, and